What is up, YouTube? Welcome back to another post trading analysis video. Um, I haven't taken any trades today, but I did miss some. So I still want to go over those trades that I missed. Unfortunately, I was very annoyed by me missing the entry. So let's just get straight into it. First on PEPE, in the bigger context, we have this beautiful Wyckoff schematic going on, and we did break structure here. However, we did form a very nice looking high. This is a very good looking high, tapping into the only supply that was remaining before sweeping all these buy side stops and coming to the range high, basically. So even though you broke structure here, you still want a reconfirmation between these 2 points, meaning in this retrace, you want to see price break back to bullish. Okay. So looking at when the day started for me, right here around 8 is where I entered the charts, and nothing really happened from 8 till around like 4:30, right? So it was a very long time, like 8 to 9 hours of just really nothing happening. Prices just, trending down, not breaking any structure back to bullish until we did come into a pretty nice POI. So what I had on my chart was I had this 30-minute order block that created this 30-minute order block, which is a 30-minute demand chain. And normally the second order block created in that demand chain always give pretty nice setups and pretty nice bounces. However, what happened is we SFP'd it, just taking more liquidity from the block, which is totally fine, right? So at that point in time, we broke structure. So in general, expectational order flow would be a higher low for a higher high. However, this can be a fake break just to mitigate that supply. So just like I said earlier, only until we start breaking proper market structure from the top down between these 2 points would I really start looking for, swing longs that you can potentially take towards the range high. Now, what happened from here is we started SFPing structure from the low up. So from the low up, we have around this 30-minute pool of higher lows and higher highs. And this is where we wicked it. Okay, this is where we wicked it, and then from there we started a range. So zooming back in, knowing the bigger context now, is that we started a range, and of course, whenever we start a range, I immediately look for range deviation plays and potential Wyckoff plays. Now, what happened is we had our range low, we had our range high, okay? And then we had our first sweep of the range low. Now, I was looking at this, okay, like what is the structure looking like from the top down? And pulling the structure from the top down, you have a high, low, lower high, lower low, lower high, lower low, lower high, lower low. The reason this isn't a pull is it doesn't have this two upwards candle structure. You need 2 consecutive candles to call it proper structure, and this is one candle followed by a bearish one followed by a bullish one. So no 2 candles going up being higher than each other before going down again. So, the real high to break is right here. Okay? That's the proper high to break. Now, checking what is the highest time frame pull that's valid. It's really just 1 minute structure. Okay. It's 1 minute structure that we kind of broke pretty sketchy in the beginning. We're kind of ranging, wicking the high until we started breaking it. Now, because we broke that structure, I'm immediately looking for a potential Wyckoff model 2 accumulation schematic. So I was looking for reasons for price to come down. Okay. Well, if we zoom out on the 5 minute, do we have something? Yes, we have a 5 minute demand zone. Okay. So price could come back to tap this 5 minute demand zone, put in your third tap, and then, coming towards the range high from there. Just your standard model 2 accumulation. You could also look for a model 1, but there wasn't really a specific reason that price needed to take out this low once more, because we already hit this little demand zone on the left, and besides that, we just have liquidity going all the way down, right? Not particularly this low that needs to go. It could happen, but I wasn't really expecting it. Also because you already broke structure back inside the range, so why break structure back inside to come back out again, right? Because we're on such a low time frame. So as you guys should know by now, whenever or how do we confirm a entry on the potential Wyckoff Model 2? Well, if you break structure between the high towards the low of the second and third tap. So the highest point is here. Whenever you break structure from the top down, meaning in this retrace leg, you see structure break back to bullish after mitigating demand. That's your entry right there, okay? Looking at what happened, if we zoom in again, structure from the top down is a low, lower high, lower low, lower high, lower low, higher high. So right here you have your break of structure. Okay. So this break after tapping extreme demand, aka the last demand remaining before taking that low, you confirmed your model 2 right here. So you could enter on the break, you know, put your stop below this low, target this high for a nice 2.2 RR. And what you could have also checked is, you know, is there a reason for price to have a retrace? And in this case, there was, right? We had this 2-minute order block that was created on the break right here. And that's exactly where price came back for to put in that higher low for the higher high. Because expectational order flow after this break, you know, is that we put in a higher low for a higher high. So what you can do in these situations, you can scale in 50% here. You can scale in 50% on the retrace, and that way you have scaled into your position. Or, you know, you want to wait for it because you don't think the risk to reward of 2 is worth it. I always like to scale in on the break and then scale in more on the retest. That's typically what I like to do. So your average entry would be, you know, around here. Put your stop below that low and then target the high. Oh, entry around here. Put the stop below the low. Target the high for about a 2.9 RR. See how that immediately increases your risk to reward for an extra 0.7% gain. Now, the problem is that I wasn't behind my PC for 30 minutes. Yeah, for 30 minutes from 5. So right here is where I wasn't behind the PC anymore. And it's very hard to set alerts because you don't know at that point in time that, you know, we had this market structure pool that needed to be broken. So I wasn't behind the PC. And of course, you know, whenever I checked it, we had this break again. So I could have scaled in on the retest again, but I don't like really chasing an entry whenever this was the real proper entry and the way to go, right? So I was a bit frustrated that that happened because I was, you know, prior to that entry, I was watching price, you know, do nothing for 9 hours straight. So yeah, it just shows that, you know, it happens to everyone. But also the reason why I wasn't, you know, as annoyed is because, again, you see that these Wyckoff schematics work, right? They just work amazingly. Have your range, sweep it, break back inside. Is there a reason to come lower? Yes, we have a 5-minute demand zone. We come back to it. We break structure from the top down, back to bullish, and then there's your entry, targeting the range high. Now, from there, what happened is we tried to break structure, and I think many people maybe look at this as a structure break, you know, because you did close above the line. But as I always say, if you have a break and the next candle immediately is a break back inside, this is not a proper break yet then. You know, it's more like I'm peeking outside of the range to just come back in. And that's not what you want. You want to see, you know, multiple candles above and then get the retest. Not just one candle and the second candle is immediately a close back inside. That's not what you want to see for a proper break, especially because you have a range going on. So this could just be a range, right here, this could just be a range deviation, you know, trapping some people into thinking that we're going higher on this break and then just reverse down before eventually maybe going higher. Now, looking at PEPE now, what I noticed that was pretty significant is the volume that came in here in this mini 30-minute range. Because if we zoom out on the 4-hour, price lets me, there you go. If we zoom out on the 4-hour and I put that volume bar on, maybe on the 8-hour you can see it better. Yeah, around the 8, maybe even on the 1-hour. Yeah, so in general, if you look at previous price action, look at this volume spike that appeared at 3. On this tiny candle right here, this tiny little candle, we have this massive volume spike. And it kind of indicates massive selling going on, right? Because it's a bearish candle and it has a lot of volume. And typically, if you just look back, maybe you're like, okay, what indicates, you know, that higher volume spike? Well, if we go on the 4-hour and just check the last time we had this such a high volume node, we had a high volume node like this right here. Let's make it a dotted line so it's a bit better to see. We had a high volume node here. Let's put one next to it so I can see better. We had a high volume node as high right here. And then we had a high volume node as high right here. So as you can see, all these highs, or all these lows, should I say, have very high volume nodes. But if we just look at what happened after that high volume node was put in, you know, we got a massive move up, massive wick up. And then right here, we got a move up. Here, we got a move up. And then right here, we again have a massive volume node going on. So potentially a move up could definitely be the case. Because, you know, seeing massive selling in range discount sections, that's actually really good because it means that, you know, these volume spikes are people using market orders. Well, a whale that wants to fill his position uses limit orders. Until all his limits are filled, you should see a limit order as like a catching net, you know? It's catching the market sell orders. And then once, you know, it has fully consumed all the market orders with its limits, it starts pressing market orders itself, pushing price higher. So limits kind of catch price from falling, and then market orders push price up. Okay. So whenever we see aggressive selling going on in the range lows, and you have this Wyckoff schematic going on, it just means that most likely more limits of whales have been filled. Now, could there be a reason why price is having this retrace? You know, we got the break, but we hit the supply. Is there a reason for price to come all the way back down again before potentially coming higher? Well, if we just look at what has been going on so far on PEPE, is that, you know, it really likes to grab everything. It likes to grab everything that it can. So right here, you know, we grabbed extreme liquidity from this point. And then right here, we grabbed extreme liquidity from this point. And then right here, we grabbed extreme liquidity from this point. And then, you know, we came back, instead of taking the high, we came back all the way down just to mitigate this 12-hour demand zone, which was the last demand zone remaining at that time. And now we have a move up. And again, we're seeing a retrace. So is there a reason from a liquidity and demand perspective that price, you know, needs to come down a bit more before going higher? And the only real reason I see is this 3-hour order block right here. Right here, we have this. Let's get rid of this for now. Right here, we have this 3-hour order block with imbalance right here. And also, if we zoom in, you can actually see that it actually some sell side liquidity above the block. So even though that, you know, this could turn into a bigger model 2 right here, and we could go up from here, I wouldn't mind price dipping lower, sweeping all this sell side liquidity, breaking structure back to bullish, and put in that higher low right there. And then from there, I do want to see it move because it has been taking its proper time. It's a very, Very extended Wyckoff accumulation. Okay. So that was just PEPE today for me, and an update right now of what's going on. Let's zoom in to see if there's actually maybe an entry right here that's presenting itself. Although I don't really like to trade these hours. Because as I always say, tiny Wyckoff schematics can turn into bigger Wyckoff schematics. Right here, we grab that extreme liquidity point. Are we breaking structure back to bullish? There isn't really a proper break. This is a very sketchy break. It is a break, but I never like breaks when you have a very V-shaped sharp move down and a very extended move up. Most of the time when this happens, it's more of like a fake break and you still go lower. Also because, you know, the way we came up, we left some sell-side liquidity below us. And, you know, these times aren't the most ideal times to trade. Asia hasn't opened yet. So you can always expect some manipulation during Asia open. So nothing really sticking out for me right now. Okay? But it could be a bigger model too. It could be. But don't be surprised to maybe come lower to sweep all these lows there. Okay. Then another trade on gold. If we check, you know, first I want to say I don't know why my candles are so ugly. Look at the candles. You know, the open and close and the highs and lows, they aren't lining up. Like, what is this? What are these gaps? It's very annoying. I don't know how that happened. It never happens. Owanda has the cleanest charts. So, yeah, I really don't know why that happened. But maybe it's like a data error regarding the TradingView integration, but I don't know. Looking at the price action, I entered the charts around here. And what happened is building some context first. We're low-key inside this massive range. You know, we're inside this massive range. It's kind of looking more like a distribution. And then, you know, we have a range within a range where this is the range inside of the bigger range. And we have this institutional order block waiting above us. And the reason why I call it an institutional block is because it is a order block backed by Wyckoff, because it's the third tap of the Wyckoff schematic. And they tend to work pretty good because, you know, you can just use your own logic and think, okay, you know, this tiny move up caused this move down. So a lot of sellers must have stepped in that area. So whenever price comes back there, they will protect that position, right? Now, we're in this range, kind of trying to break structure from the top down, low, high, lower, low. And we're trying to break that structure, but it's not really working because we SFP'd it. And SFP is not a break. Now, zooming in, what we have been doing after taking that high, we've been putting a downward structure, right? We have a high, we have a low, lower high, lower low, lower high, lower low. So if we use this internal downtrend, we can also pull a range from the low up, right? Trending down, pull your range from the low up. And as you can see, we here have a range low. We swept the range low on Asia Open Monday, came back up, and then had another sweep of the range low. And in this situation, there was a reason for price to put in a Model 1. Why? Look at these two liquidity points. These were your Asia low of Friday. And price still likes to come back for those. It's amazing to see. So we had a clear Asia low liquidity POI right here. And as you can see, price comes back for it immediately. Now, when do we confirm a Wyckoff Model 1? It's the exact same as the Wyckoff Model 2 whenever we break structure from the top down between tap 2 and tap 3. So between this point and that point. Zooming in to see, you know, did we have structure to wait for? Yes, very clear structure on the 3 and the 5 minute. In this situation, I always like my breaks to be back inside the original range low. So this in this situation, the second tap, right? Which was your most recent range low. So you can try this 3-minute break, but I prefer to wait for this 5-minute to break because that's really back inside the original range, which is always better, right? So right here on this break, we confirmed that price was going to come towards this high because the Wyckoff schematic is in play. And it just shows that this is a real third tap because look what it did. It had a real reason to sweep all this liquidity. It also happened prior to London Open. So, that typical 1 hour before London, we get the actual move. That's 3-minute break caused range demand right here. And what happened is, did price have a reason to come lower before continuing higher towards the range high? Yeah, because we had structure or we had range demand that was still unmitigated. This 3-minute range demand, right? It has a tiny, tiny, tiny mitigation right here. But as I always say, if you pull it down, it's still unmitigated. But so I'm losing my voice a bit there. I don't know what was going on. But in these situations, I just like to leave it here because it doesn't really matter what the demand does. We just have to wait for structure to break back to bullish, right? Because this is just your last point of support. Whenever I say LPS, it stands for last point of support, meaning this break confirms that the Wyckoff Model 1 is in play. But it doesn't mean that you have to go straight up. No, Wyckoffs can have, Model 1s and then just higher lows. And every higher low is an LPS, so this would be an LPS. This will be an LPS until you tap that initial range high, which is waiting above us, okay, in the circled area. Now, we came back for demand, so it's still completely valid, right? And then we just wait again for the reconfirmation. So after this break right here on the 5-minute, what is expectational order flow? A higher low for a higher high. When do you confirm that this is actually going to be the higher low on the 5-minute time frame? If you break structure between these 2 points. If you break structure between these 2 points back to bullish, that confirms, that this is the higher low for the higher high on the higher time frame. Zooming in, do we have structure to wait for? Yes, we do. Actually, on the 1 minute. Right here. Right here, you have structure. Boom. There you have your break of structure. Price came extremely close to that low. Extremely close, but it never took it, which it shouldn't because there was no reason to, right? So let's say you entered on that break, which is valid. Maybe you would have been stressing a bit. Maybe you were like, what? I want to see a bit more, a few more candles. And if you waited a bit more, you would have never stepped inside or taken the trade because there were just 2 candles down. So you would have waited, right? This was your second break. As I like to say, I always like to scale in so you can enter a bit on the break and then maybe enter on the second break. So you have an entry here, average entry is around here. Put your stop below the low and the target is the Wyckoff high, which is the range high, right? Boom. Boom. For a 3.9% gain. Then the moment you create another structure leg, right? The moment you create another structure pull right here, a very obvious one, and you really pull away, that's when you can move your stop loss from this low behind the most recent higher low. And you would have been de-risk at that time. So, that's just trade management. So you're not risking 1%. You're following structure up until you can de-risk yourself properly, okay? Just watch out for price potentially wicking that low and coming higher because a wick is not a break, okay? And it is allowed to wick it and still go higher. So maybe always put your stop loss 2 market structure points back. Again, a reason for not being in this trade is, one, I wasn't really planning to trade gold today. Normally Mondays aren't that good. I was a bit more focused on PEPE, and my candles are so ugly. Like, it's still tradable for sure, but I don't know what's wrong because my friend did not have this. So if anyone knows what's up with the Owanda charts, please let me know. Maybe I can fix it because look at this. What is this? Oh boy, this is terrible. I cannot draw order blocks properly in this way because, all the candles are messed up. But again, as you can see, it's a Wyckoff schematic that hit its target. So 2 Wyckoff schematics today, absolutely beautiful, already coming a bit lower here as I just discussed. So very nice, very nice. Wyckoff works. It's, in my opinion, one of the best entry models out there, but that's just my personal opinion. There are no right or wrong entry models. And then what price actually ended up doing is we had a local model 1 here. And as I always say, model 1s can flow over into model 2s, or tiny Wyckoff schematics can flow over into bigger Wyckoff schematics. And what actually happened here is price broke outside of the range just to come back inside, sweep extreme liquidity. So if we get rid of this, this is your most extreme liquidity point. Just the market structure leg from the low up right here. This is your break outside of the range. Let's extend it to the range high. And then price came back for it, making it a valid third tap because it meets all the requirements of a third tap. Why? Well, the requirements are either grab extreme liquidity within the range, which it did. This is the range low. This is the extreme liquidity point, meaning the last liquidity point before taking the low. Or hit extreme demand, which is also candidate because this was some sort of a demand. So it did both. So this was a valid potential third tap where this Wyckoff model 1 would turn into a bigger Wyckoff model 2, right? And then right here, again, when do we confirm an entry? If you break structure from the high to the low between these 2 points. And that was right here on this 3-minute break. And again, this was exactly at 5, the time where I left my PC, which also caused me to miss the PEPE trade. And then that was your entry. I would have put my stop above or below the internal low just because we really grabbed a extreme liquidity point and there was no demand lower because look at all this demand that was mitigated right here. It was perfectly mitigated here. And then this was a demand chain. So I'm like, I really don't want to see it come lower than that. So putting my stop loss here just saves you that extra RR. And then, yeah, you can target the high, but you do have that sell side liquidity here. So initially this would be your trade. And then the moment you create a proper new market structure leg like this, you can kind of move your stop to entry and let it ride out, right? But I would already be taking some profits in the premium section of this range just because, we just had this massive buy to sell. So it's not really that this is a clear target, When we came down here, we didn't really grab the high. So you can aim for the highest because you're curving down and you pop back up. You already had that pop. So it's not really a clear target anymore. So I would already start taking profits along the way, securing some money, okay? So actually there were 3 trades today. I missed all 3 of them. 2 being in the same time slot, and then this not really paying close attention to gold. I really like my candles to be fixed. So yeah. Now going over some Bitcoin before we're gonna wrap it up. What has Bitcoin been doing? Well, updating from my last stream about Bitcoin, I actually called and I said, yo, this could be the macro low. From there, I called it at 315, which is right here on this move up. From there, we have had around a 5 to 6% move up. But as I've been saying before, this is your most important high to break. If we're not breaking that high, we're not going higher, okay? If we do break that high, I'm very convinced that this would be a macro low, and we can come towards the range high from that point. Now, what we did is we did break 1 hour structure, but immediately upon breaking structure, we have started a new range in here, okay? And this is actually looking like a really nice range to trade because so far, we have our range. We have very clean looking demand below the range low, which is range demand, just these downwards candles before pumping up. And then we also have this 15-minute supply zone, which is the only real proper supply zone left besides taking that most important market structure high. And we have that right above the range high. And we got our first sweep of the range, indicating a potential start of a distribution in the making. We do have some liquidity to grab below us right here. And we, swept the range high, broke structure, also broke structure back inside the volume profile. So, you could have tried to short this move, put your stop above the high, aiming for some internal liquidity. If you trade the second tap, you cannot per se target the range low because it doesn't have to go there. Price can have a lot of internal rotations before taking an extreme point. Okay. But yeah, maybe you were like, okay, let's trade it from volume area high to volume area low, which would have been a very nice trade, or on a 4% gain, which is very nice. Now, the way price has been coming down, though, we're also leaving lots and lots of liquidity. I think I can even call this trend line liquidity. Yeah. We've been leaving lots of liquidity above us in kind of a trend line fashion. But what I would look for now is that, we already have a sweep of the range high, but we have no sweep of the range low. So, I'm definitely watching a sweep of the range low, breaking structure back inside the volume profile and back inside the range. Preferably, we come down very slow like this, leaving lots of liquidity, and then we're just going to have that pop back up. But I would also look for the range high again, because we still have a reason to come higher, which is that range supply. So we can potentially, create a Model 1 distribution where we wait for the third or for the second sweep of the initial range, and then we wait for structure to break back inside, put our stop above the high, and target the low. Okay? So watching for the range high for a potential trade, watching the range low for a potential trade, kind of curious what's going to happen in between. And overall, cannot become too bullish yet because we have not broken this very important high. Okay? Checking the volume profile real quick. Yeah, look at that. It's a very crucial point. So I would actually prefer is price to come up from here without taking that low, get that distribution short, have a clear target, the range low, because it hasn't been tapped yet if we come up from here, and then find a short and a long. That would be amazing, because once we get this confirmation right here, there's not really anything stopping price from rejecting because we already rejected from the volume area low and the supply zone once. So now that that supply zone is mitigated, it's not useful anymore, right? So best case scenario, if I would draw it very nicely, maybe we come lower, break structure from here, move up, leaving liquidity, boom, boom, break structure back inside. That's where you find your short. Target the range low. Dumb down. Come back inside. Boom. Break structure. Reconfirmation right here. And, this turns into like a Model 2 or something. And we long it up. And then this right here, I would actually try and long it at least towards that high and see what happens from there. So that would be my ideal scenario. Okay, it doesn't have to happen. It would just be my preferred scenario: a short and a long. So overall, the calls have been nice. I really hope we keep that low. That would be so insane. One, I would make very good money, but two, that would be just a crazy call, right? It would literally be a crazy call, calling the macro low here for the move up. And one thing I wanted to say before wrapping it up is that I was just thinking of this possible scenario, right, where this is a clean looking Wyckoff schematic, Just like I said earlier on the local trades, this is actually a proper third tap because it swept extreme liquidity. It had a reason to come back because we left so much liquidity below us, right? And now we have so much liquidity above. But we already know that. What I would like is, let's say this is that macro low for now, and we do get that move up. I think right here, a lot of people will start calling for Bitcoin going to 100K because we had, a 100-day range accumulating. But I think it's way too early for that. So even though I am bullish right now, and I think we can have a rotation towards the range high very soon, I don't think we're going to break out from there immediately. I don't think that's going to happen. That will be too quick. So, maybe deviating the range high a bit, coming lower, maybe all the way back down to this area, just to, put in a higher low regarding this Wyckoff schematic. Even though the Wyckoff schematic would have already done its thing, tapping the range high, that's the technical target. Maybe it turns into like a bigger one, I cannot predict that. All I can say is that after tapping that range high, anything can happen, and I expect some manipulation. I don't expect this to be an immediate breakout. I don't expect it. I think this is gonna, look like it's going to turn bearish, and then at any given time, at a random moment, just boom, it just pumps up. I really think it's gonna be unexpected and not as easy as it's portraying now. Even though right now it's not as easy because a lot of people are bearish, I even took a bet with another guy for 200 grand, but he was too scared to take it. Right here, I said, this can be the macro low, and he was telling me how my Wyckoff was wrong. So, so I'm like, you want to bet on it? No disrespect, just make a bet. Just man to man, but he didn't want to make that bet. So, yeah. Hope this was useful for you guys, and I'll see you tomorrow. Hopefully, we will actually not miss all our trades then. Okay, peace out, guys.